do you think that what's happening, the insecurity in the banking sector, is responsible for the current run up of Bitcoin, right? It went from 20K to 28K in a very, very short period of time.
Well, I think that it's isolated how many people are really buying it on that. Look, it's kind of straddling between being the leading risk on asset and being the lifeboat, right? So you've got this portion of people who are buying it. They're like this. I'm getting out of the fiat system. I'm buying Bitcoin. I'm putting my life savings into it, and that is happening. There's no doubt about it. I've read some of the newsletters and reports on just who is actually, active and what wallets are active. And these are long-time holders, right? These are the hodlers. And then you've got the hedge funds who are just whipping it around, and they're expecting to use it as that risk asset. And these, the people who don't understand it yet, that put it in the same category as Ethereum or whatever shit coin that you want to put in there, they just don't understand it yet. And then you've got, the challenge that the regulatory environment is making it difficult for them to really understand it perfectly and take that risk, that's career risk, that they're going to put a portion of their portfolio into this asset that hasn't really been defined by the regulators yet. And so there are those problems that are going on. I think they're going to get solved and they're going to get sorted out soon. But this should be what happens. Honestly, with everything that's going on, Bitcoin should be at 50,000 right now at a minimum. Like, this is just nuts. So. But that's my
okay. Opinion. So let's build on that. I'm going to be more adamant than James is that a lot of the marginal buying is because of people who are finally waking up to the risks in the banking system. That being said,
and I truly hope that is. I truly do.
Well, here's the funny thing. I'll make sure that we both stress that this is what Bitcoin was designed for. So don't forget, in 2008, 2009, the Genesis block basically said, the chancellor is bailing out banks again, right? So this is the second coming of a bank crisis that is the result of not solving the first banking crisis properly. So let's understand that Satoshi had a vision that he needed to have a lifeboat. And luckily, we do have that lifeboat. Is it all the marginal buying doing to that? No, it can't possibly be. But I'd like to think that a good chunk of it is, because that's what Bitcoin was designed for. And it's performing like it should. Now, here's the crazy thing. James says Bitcoin should be at 50,000. I'm going to be like, I can't believe it's not at 250,000. And by the way, I'm even going to go on record saying this guy Balaji, or Balaji, however you say his name, I didn't even know who he was before, but man, I like his style. Because why? Even though I think it's a low probability that he's right, it's not zero, people. Just please understand what a distribution of possible outcomes looks like. And he's focusing on a tail risk, or in this case, a tail opportunity, because if the system does come down in magnificent fashion, Bitcoin will be at a price of greater than $1 million. When? That's the key. Is it going to be in 90 days? Unlikely, but not impossible.
All right, but let's talk through that. Here's a possibility. Possibility is that the Treasury market completely locks up and we get QE infinity, right? I mean, like, we talk about they printed about $7 trillion last round. They could print in the 20s this round without even blinking to have to save this market. Well, how does that happen? Well, the US dollar liquidity is low. There's a need for US dollars, right? So you have all these international buyers, right? So these sovereign buyers who are not buying treasuries on the margin. Well, what if they step away from one of these large auctions, or a number of these large auctions, and the treasury market locks up? We saw what happened the 2-year today. Did you see that, Greg? It tailed by 2.7 basis points. The 2-year.
All right. Yeah. 2-year. Okay.
Yeah. Okay. So it was an awful auction, right? So, that there's a possibility that that would be something that breaks. Like, that is a credit event. Like, that is something that if the treasury market locks up, man, we have so many problems, and they'll have to print until all of our eyeballs will bleed. And that's not a non-zero event, like non-zero probability event.
Yeah.
That's the thing. right?
Yeah, and that's why I always like to look at things from an expected value, um, potential outcome, and you put probabilities on different prices, and then you do your expected value. Calculation. That's statistics 101, how to calculate an expected value. But I'm very clear with everybody. I have a price target for Bitcoin of over 2 million US dollars. And should it be there? Yes, it should be there today. And the fact that it isn't blows my mind because it's so damn cheap. So I can't argue with Balaji saying that in 90 days it should be at 1 million. This is something that makes it the best asymmetric opportunity I've ever seen in my life. And that is all good because asymmetric return opportunities are what define careers. Okay.
Hold on, Greg. I want you to like elaborate a little bit when you say that, right? You said it's so damn cheap. $2 million is obvious, just to use your words. It's just math, right? Could you elaborate about why you believe $2 million Bitcoin is cheap?
Okay. So, well, that's my price target and it's not a limit, but it starts with examining what total global financial assets are in the world and how much Bitcoin can capture from that total addressable market. So total financial assets in the world are 900 trillion US dollars. Okay. That includes all global debt, which is 400 trillion US dollars. It includes $300 trillion of global real estate. It includes about $100 trillion of global equities and then $100 trillion of other assets like fine art, gold, commodities, currencies. At the end of the day, that's $900 trillion, right? So 400 plus 300 plus 100 plus 100. And I like to think that Bitcoin will capture 5% of that addressable market. What's 5% of 900 trillion? That's 45 trillion US dollars in today's dollars. What is 45 trillion US dollars divided by 21 million Bitcoin? That's over $2 million US per Bitcoin in today's dollars, which is to say, as long as it's trading at less than that price, I view it as cheap to my target price. Now, there's other ways of calculating intrinsic value of Bitcoin, including using credit default swaps and everything. All of this goes into a calculation where I just look at Bitcoin trading at 25,000 US dollars and I say, thank God that it's there so I can buy some more and I can get other people onboarded. Here's a question. So what is keeping BTC price down according to Zed Logic? It just came across. Look, that's what makes a market. Okay. A market is made by buyers and sellers. When it was trading at $1,000 of Bitcoin, when I first got involved, I'm like, I know this thing is going to 10,000. Did I load up the boat? Yeah, a little, but not as much as I should have, given now it's trading at 25,000 and I figured it's going to go to 2 million. So manage your risk. Don't put a time limit on your investment. I own this thing for 20 years at a minimum. I'm owning it for my kids, and I'm not going to sweat the fact that it's trading at a price that I think is extremely cheap. Well, it was a lot cheaper than that at one point in its time, and it did get to 70,000, but 70,000 is such a rounding error. I just look at it and I'm like, okay, guys, if you're sweating over the next $5,000 or $10,000 move in Bitcoin, you're managing your risk inappropriately. You don't know how to manage risk. Very simple.
Beautiful. James, you have a response to that?
No, I was going to walk through the probability. Then people ask about this too. So what's the probability? How do you get to that? Well, Greg's saying that, look, if his price target is $2 million, right? And mine is one as an investment asset for the institutional investors. That's not my end target. That's just the starting point from when institutions adopt it widely. But if you're looking at that and you say, well, Greg says a $2 million target, it's trading at, let's just call it round numbers, 25,000. Well, what is that? What's 25,000 divided by 2 million? That's
like a 1%. It's like 1%. It's just over 1%. And that's what I'm saying, Nico. The market is telling me I'm 99% chance I'm wrong. And I'm like, hey, I'm not 100% certain I'm right, but I'll give you dollars for donuts. I'm way more confident that I'm greater than 1% chance I'm right. And this is how you manage risk.
Yeah.